This is the Friday, August 2nd, 2013 version of the Market Plus segment. Joining us now is Jamey Kohake. Jamey, welcome back.
Thank you, Mike.
We've got a lot of great questions from people on Twitter, and I'd like to start with Bob in Columbus Junction. He's asking a question that I've heard from a number of producers. They were holding on to grain, haven't maybe marketed all their old crop yet. Now his question is, we received $1 million rain last week and have good crop coming on. I don't have enough grain sold for what bin storage I have. Will there be a better opportunity for grain sales before harvest? What's the advice to folks who still have old crop corn or beans?
Old crop is really, like you're saying, they're taking a beating on the basis. And one day getting wiped out for over $1 a bushel. We have bounced back a tad bit here the last few days. I don't think we get back to where we were here before harvest. You could save a few pennies and wait it out. But I would be selling, 20-cent rallies late this week. We can get one coming into the report. For that store grain he's talking about there, I like the $5 March area. There's a little bit of carry out on there for him to take advantage of, and that's what I would more focus on and look to lay this old crop off on rallies here short term.
Okay, just unload it before we get to harvest as you get rallies, as basis hopefully improves.
Basis improving. I don't see futures doing much. Basis will help out, but I don't see much happening until closer to October that's going to hold together. The market is just short covering, profit taking. Rallies don't hold, to my mind, until after Labor Day, the earliest.
Now, as we look at the basis, what have we been seeing with ethanol plants around the country? Are they, with these high crude prices, are we seeing more production ethanol? Where's that going?
Margins are profitable, obviously. We are using a little bit more based on where we were a year ago, but the supplies aren't near where they were either, so it's kind of a wash in here right now, with the ethanol traders. But we keep this $106, $108 crude. Obviously, it helps the ethanol guys, helps the corn guy. But margins do look good right now. And
now, where do you see crude headed? I mean, are we still trading on that risk premium from everything that's happening in Egypt? Is that where we're at right now?
Yeah, surprisingly, we didn't get a Egypt rally this week. It was more off of Libya. A little bit of unrest over there, where there are actually some pipelines at, not in Egypt, just playing political unrest. But did see a nice rally there midweek, didn't hold together Friday. I like selling rallies in crude. I don't think the demand stays in the market long term. I like 108 October. If you get up in there, sell some calls. But I'm a little bit bearish up in here in the energy market right now. The rally more based off these outside markets, more on a risk-on type trade this week. We saw the China PMI numbers this week. They were bullish. Some bullish numbers coming out of Europe, some decent numbers here. We saw the stock market rip at new highs, crude bounced, and just kind of a broader risk-on type deal again, but I don't think it holds here short term.
Traders were trading a little sunshine this week.
Exactly.
And we saw some exuberance in the markets. All right. Now, as we take a look, James in Kremlin, Ohio, we talked about Chicago wheat. His question, particularly KC wheat, are we going to see that rally at all? What are your thoughts?
Yeah, I like KC wheat just like I do Chicago. We're pretty much done with harvest and should start to see a seasonal correction. I think demand will stay good for the wheat market too.
Seasonal correction, thinking
30, 50 cents.
Okay.
That area coming into fall, not based off 1 or 2 day trade, 3 months period.
Okay. Get up there, and so as we approach that 30-cent range, begin to make some sales.
Yeah, begin to make some sales. Also, to look more at corn. I think we'll be more linked to that than a lot of spread action. But watch the fall harvest with the row crops. But I like wheat here short term on its own.
All right. Now, we've had a couple questions as we've been talking about the estimates. We've talked about the USDA estimates. We've talked about Informa's estimates, both acreage and just production numbers. Corn Broker 21 is just curious, what numbers do you use?
I scale a lot of different research together. I like 13.8 right now for corn. I'm a little bit lower than where Stone was this week, but there'll be a lot of adjustments being made. Obviously here the next 30 days, but I'm more focused on the time period for harvest than trying to outguess acres right now again or crop size. A lot of this crop, going to be black layering in October, and I think once, like we said during the show, get past Labor Day, the freeze talk. So I think there's a lot of uncertainty, obviously on the horizon, than trying to outguess the USDA again. They've been so erratic, the last couple of years that I don't put a whole lot of faith in anything right now, based off estimate-wise.
Okay, all right. Now, Phil in Canada is curious, as we're talking numbers for December corn crop, Phil is curious, where do you see the bottom on D's corn?
That's the million-dollar question. I think a lot of it depends on how heavy do the funds want to get short. They're already loaded the boat up right now, roughly 120,000 contracts. I could see maybe get to 150. That's a massive position for corn. I think you could be talking 420 then. But I don't think we do all that right now. I think it's the same picture as being, kind of bullish longer term, that we need proof. We need, how many acres actually do we plant? I mean, are we going to get 156, 158 trend line? Can Illinois, Ohio make up for half of Iowa, half North Dakota, half of Nebraska? That's what the picture looks like right now. So I think we did, start talking 420 corn. It's probably going to be October period. Same thing the Bull's saying, can we bounce back, to 5.5? We need more information.
Combines need to be rolling to see where yields at, and then we can
yields
actually start
at
getting some real
acres,
numbers.
yeah. See, can the East make up for the West? But trend is down. It is bearish right now. 450 is the next line in the sand.
Now, I'd like for you to put something in perspective if you can. You said that the funds currently have about 120,000 contracts short. Talk to us last year. How long were the funds around this time of the year? As we were talking drought and the story was really getting compelling, how many contracts were they long? Do you remember?
I do remember a little bit. I don't remember exactly, but around 80,000.
Okay.
Picture that area. I don't think they were as long as they were short. I know that for sure, but I think it was less than 100, closer to 80 roughly this time 12 months ago. Last year, too, we saw a lot more spec money than we have right now. The specs are pretty much sidelined. They're playing the stock market pretty hard right now with record highs there. But this is a big position for the funds right now. And like I said during the show, you spark freeze, bullish USDA. I mean, you're back 30, 40 higher in no time at all. But it's going to be just a short-term rally because the funds aren't going to pull out in a week long and say now we're back long again. They're going to fight it for a while.
They're going to fight it. Now, before we let you go, as we talk about this farm bill, it's dragging on. What are your thoughts? Is the market changing the way it deals with anything because of the delay in the farm bill? Is it having any effect?
I don't think it has yet. I think it could, not the delay, but if they did change some of the direct payments up, something like that, you flip some acres around longer term. But supposedly, the politicians are saying they want to keep it one big package now. They want welfare on one side and the farm bill on the other side, that they do it all in one big package. They can actually do some revisions and get it updated. I don't know if that's the case or not, but it seems to me just to be one big government bloated program again.
All right, and so we won't really see any effect on the market.
I don't think it affects the market at all, and I can tweet Jared my opinion too on the farm.
All right,
it's
Jared and Seldom Rest has a question.
It's not a market mover in my mind at all. It's more on the subsidy side.
All right, now before we let you go, any trades out there that are looking really good to you this week? Anything people might consider making a move on?
October hogs, 85.90. Take a short up there. In December, Chicago wheat at 660. That's only two things I really like right now.
Now, as we follow up on those, the hogs at 86, what's a good exit point?
82.
82?
Yeah, that area. 690 for the wheat, pop out in there. But those are my two favorite trades.
All right. Well, thank you for being with us, Jamey. Really appreciate it. And thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we'll get expert answers for you. Have a great week. Thanks for watching.